This market is exhausted. Obviously, the short-term traders, the meme coin traders, they got burned. They don't want to be burned anymore. But also the long-term holders, they are exhausted as well. Let me show you some data, some things most people don't show you. Have a look at this chart here. This is the realized cap net position change for Bitcoin. When this is high, it means that long-term holders tend to sell their Bitcoin. They tend to move their Bitcoin. So the holdings that haven't moved for a while, they suddenly start moving. And this tends to be the end point of a rally. So we saw a lot of long-term holders selling at around 72K for Bitcoin. Then that selling pressure subsided and then it came back when Bitcoin hit 100K. And now we are back down again. So whatever kind of price decline we might see from here is not coming from the long-term holders. They have already realized their gain. Another very similar metric that also tells a similar story is to look at the in and outflows to the centralized exchanges. Because most whales, right, most very large investors, they hold their Bitcoin by themselves via self-custody. They don't want to have their Bitcoin with Coinbase or any other company because then you introduce in another layer of risk. And so whenever we see inflows into the centralized exchanges, it's very often a sign that those coins get sold and that then again the current rally might stop. We saw this peaking at 72K, we saw this peaking at 100K, and now it's comparatively low. Whenever the market heats up, right? Whenever a lot of people talk about Bitcoin and crypto in general, that's also the point in time where we see a lot of short-term speculation happening. In other words, the very active supply that trades Bitcoin actively tends to peak when the market in price also peaks. Have a look at this. This is Bitcoin's hot supply. So this shows the Bitcoin that have moved within 1 week. Again, we see two peaks. Again, we see this at very similar times when Bitcoin was at 72K and when it was close to 100K. And it is also cooling down. All of those metrics align. Everything seems to be cooling off, both the short-term trading, but also the selling by the long-term holders. But on top of that, we also see some deleveraging happening in the derivatives market, in the perpetual futures. Have a look at this chart here. This shows the futures open interest through various vehicles. CME is a traditional finance vehicle, but then we also have quite a bit of liquidity from Binance and Bybit, etc., all those centralized exchanges as well. It seems like the open interest in the futures is correlated with the Bitcoin price. But there's also a not that obvious correlation, and that is the perpetual futures open interest relative to the ETF balance. So the CME open interest is in blue and the ETF balance is in yellow. The graphs tend to move in the same direction at the same time. There's correlation. I think this hints towards a lot of people doing cash and carry trades. So just interest rate arbitrage, not necessarily positioning themselves in any direction for Bitcoin. What that means is when there's less demand for derivatives, that then the balance of those ETFs is also going down. A lot of people actually did not expect this. So this is the Bitcoin ETFs, assets under management, a long-term chart. So we've got the price, this is this wiggly line, the Bitcoin price, and we take this away, we just have the ETF balance. And most people expected that the ETF balance will just continue rising all the time because Wall Street is going to accumulate Bitcoin long-term and that accumulation has just started. But it seems like since the beginning of February, the accumulation is slowing down. We rather see distribution. And again, this seems to be because open interest is also going down or the leverage in the market is going down. So it's by no means 100% clear that the ETF demand will always be positive, that this balance will always go up. At least partially, it seems that some of the Bitcoin ETF demand does go with the trends. So when we are in an absolute bear market, we're probably also seeing some distribution through the ETF. The ETF is not just a constant stream of demand over time. It does fluctuate as well. It's simply just another onboarding mechanism for capital. Yes, in the past, there wasn't too much volatility in that demand, but that volatility might increase slightly. So it's great to have the ETF long term, but it might actually increase the volatility in Bitcoin's price, because when the ETF is selling off, this puts potentially more strain on the price development. Now, here's my impression. It seems like the positive momentum for Bitcoin is pretty much lost, right? Nobody is really interested in Bitcoin, especially after Trump did his pump and dump with the meme coin. A lot of people got burnt. A lot of people don't want to hear about crypto anymore. At the same time, we also see how the selling pressure by the long-term holders is going down. So it seems to be happening is that the market is just trickling down over the weeks. I'm not expecting any sudden crash unless we see a black swan event from traditional finance. If something suddenly in TradFi blows up and the banking sector or the commercial real estate sector or whatever suddenly blows up, then of course this will also spill over to Bitcoin. If we don't see that, then probably Bitcoin will continue to trickle down. It seems at least that's what a lot of option traders are also expecting. Because have a look at this. This is the implied volatility of options based on their strike price. Now, this might be a bit complex for people, but I try to explain it relatively easily. When you buy an option, so a bet on the price, you buy the right to buy that asset in the future for a particular point in time. So you basically get a lot of leverage on the price. You say, I want to buy the right to buy Bitcoin in the future for, say, $90,000. If now Bitcoin reaches $91,000 at the expiry of your bet, then your option is worth $1,000. And so what happens is when people expect a lot of volatility in the price, then the options get more expensive, because then the return distribution gets broader and broader. The likelihood is higher that we will reach higher prices. So the more volatility is anticipated, the higher the option price is, the more expensive it is to buy an option. And the $90,000 that I took as an example is over here. And this is basically how much we pay for the option, or what the market is anticipating in terms of how volatile prices could develop. What this shows us here is that the market thinks that there's quite a bit of a likelihood that we are going to see 65K or 75K. It is expensive to buy options around this price level. If the implied volatility is high at those low price levels, it means it's expensive to hedge ourselves with options. The market is anticipating that something bad is brewing. And there's probably two reasons for that. Here's the first one. What we've got over here is the short-term holder rolling 30-day loss. And when this peaks, that's a good time to potentially buy in. So that was over here in July 2021, was here in July of 2022. And yes, this is higher now than usual, but we are definitely not at those peak levels. In other words, we might have just started the decline. Here's the second reason. This is the cumulative long-term holder realized profit. And it tends to be peaking out at similar levels across those different bull runs. And we have reached heightened levels yet one more time, right? We are over here. There is a case to be made that this bull run could already be over. At least the long-term holders have taken profit, and the professional investors trading options think so as well. Now, I don't have a crystal ball either, right? I'm simply just presenting data. And I think that there is potential downside that most people aren't anticipating. I think there is a real case to be made that Bitcoin could hit 50K or at least 60K. That was a statement that was unheard of just a few weeks ago, right? When we hit 100K, most people were calling for 200K. I was always skeptical. I took profit at 100K as well. What I'm currently doing is I'm betting on falling prices, not necessarily only of Bitcoin, but also especially of very weak altcoins, because most altcoins underperform Bitcoin most of the time. If you want to know more about that strategy, feel free to check out the premium membership. It's down below. It's thebitcoinstrategy.com. You need to have a strategy in bear markets as well. It's better to also make money when prices are going down. I actually think it's easier to make money when prices are going down than to make money when prices are going up, because again, most assets underperform Bitcoin most of the time. In a bull market, we have to find the one winner. In a bear market, we can just bet on the overall market doing poorly. So looking forward to seeing you again here on YouTube. Feel free to subscribe. A like would be very much appreciated as well. It helps the channel grow. See you again over here, or potentially see you in premium as well. Link is down below. Cheers.